Welcome back to a market recap with Ticks and Trades. I'm Sam Morton. Today is Thursday, May 8, 2025. We had a strong session, 2 clean base hits, and a solid discretionary trade that I took early in the morning. The market reacted to some of our levels, 3 to be exact, that were provided before the opening bell, and some macroeconomic news, so that provided opportunities for those prepared. Let's break down today's action on this daily chart. Today's session in the SPY printed a doji candle. That's a classic sign of indecision. So that tells us there was a genuine tug of war between buyers and sellers. Throughout the day, neither side was able to take full control by the close. So the bulls had some momentum early. We'll look at that on the 1-minute chart. So they rode the energy from yesterday's post-FOMC stabilization, but that enthusiasm hit a ceiling right at known areas of resistance, namely at a level that we had on the board from the morning at 568.95. We'll look at that shortly. And that acted as overhead resistance and pushed price back down. So price seems to be caught between rising bullish pressure on the intraday charts and longer-term downward pressure from the daily trend. This doji candle forms right in the middle of that battleground. So looking ahead, if price can break and hold above 570, we could see an attempt to move into the 570 to 576 area, with the potential to test 580.50 or so in the long term. But the bulls will need to fight some important resistance areas on the way up if they can do that. If the bears push price back down below 562, and especially below 558, then we could see them potentially try to get price down to test the 50-period moving average again. That's the blue line, which is currently right below 554. Here are the daily levels in the game plan, which were put out before the market opened. So the game plan highlighted the importance of that 568.95 level as potential resistance, overhead resistance, and also 563.02, that's the 61.8% retracement. It was noted as a key area to watch, although it wasn't an official trade level for the day. A speech by the president at 10 a.m. Eastern was on the radar, with the potential to impact market volatility. And here's the entire day on a 1-minute chart. So base hit number 1 was after the 15-minute window opened. SPY pulled back into the 562.14 level and provided a base hit opportunity. They attempted it the first time right here, but that was not a near miss. They did not get close enough. So that's one official base hit at 562.14. Later, on their way up to 568.95, they hit 565.52, and that was a near miss and would not have triggered a trade per the rules. But when they got to 568.95, that was a clean base hit within a minute. If you held out for longer, you would have had more than 4 points, but the higher probability is to grab 4 points at decent levels of support or resistance. Typically, you would recycle the trade at 568.95 when they got above, and then they came back down into it. So a long trade right here. However, that did not trigger just like before because it was a near miss right here. So attempting a long trade there, while it did work, you would have run the risk of them getting below, which they did later, but it's safer to play by the rules and assume the trade happened over here during the near miss. I took 1 trade. I averaged into a long position, ended up with 4 contracts. I bought 2, and then I bought 2 more. This was before they got down to 562.14. I just felt better about an area before that, and I scaled out of the trade by selling 3 contracts at a pretty good amount of points and trailed the remaining contract up and got stopped out. I can't remember the number of points, but the total net gain was over 10 points on the 4 contracts. And that was my only trade of the day completed before the first hour, before 10:30 a.m. And if you've noticed a trend here, it's generally better, I think, to get out before noon. At least the first 2 hours, call it 9:45 to 11:45 a.m. Maybe I should pause this here. When it gets up to, here we go. I had a target to take the 1 contract off, just missed it by a little bit. They came back down and stopped me out at 675 on that remaining contract, and that was it for me. And I saw no reason to continue this recording after 11 or so. I think it was right about 11 o'clock, at which point I got some lunch, and that was it for me, the 1 trade for the day. Here's a quick look at the logs, starting with what things could have looked like for you if you played by the rules today. 2 base hit trades is 8 S&P points. Note the metrics for the year so far, approaching 74% rate of return so far in 2025. On the Sam's Trades log, you can see how the 4 contract long trade, which I entered as price was coming down into 562.14 the first time, netted me over 10 points, so total of $2,042 before commissions. Very good return so far this year. If you were trading a 2-contract position size and did everything I did so far this year with a starting balance of $50,000, it would almost be $94,000 by now. And that's just a strict 2-contract per trade approach to keep things simple on this log. So imagine what you could do if you scaled up appropriately as your account balance grew. So that's a wrap for Thursday, May 8. If you found value in today's recap, please like the video and subscribe to the channel. Share your thoughts or any trades you took in the comments below. Thanks for watching, and I'll see you in the next recap.